Hey guys, welcome back to the channel. I'm an asset coach and tax strategist, and this channel, as you know, is all about asset coach and tax strategists, what we call the economic termites. In my book right here, we talk about taxes, inflation, time, laws and regulations, and debt, and those are the economic termites that eat away at our wealth. The worst of them all, the laws and regulations, are politicians. They make decisions that really affect all those other four. And so, as you've witnessed on my channel and the videos that we've done, the content we've done, is what we really try to do is besides original content that we create and try to educate, I like to go through other articles and read between the lines. And the reason being is I want to make sure that you and I as business owners understand what's being said, and really they're telling us their game plan. It's very important for us to know and understand what's happening, and also to understand things that they may not really realize and understand, because remember, our politicians aren't business owners. Right? The majority of them went to law school. They were a lawyer for a period of time, and most of them went right into politics. And so they're lifetime career politicians, which that's a different conversation, whether that's good or bad. And they've made millions of dollars on the backs of you and I. We know that. All right. So I'm not saying that to depress you, but the reason why I bring this up is because most of the things we've talked about so far have been local news. When I say local news, within the United States. Now, I have been getting a stream of different articles from mostly around the Asian region, and just very interesting articles that I've been reading for the last month or two. And finally, I decided, I'm going to do I'm going to do a video, and I'm going to feature 3 articles and kind of show you a timeline of conversation that's being said overseas, not about the U.S., but just in general from a perspective from Asia, but also a global perspective as well. So I'm going to go ahead and minimize my screen, and we're going to start with the first article here. And the first article talks about Japan's banks suddenly hold huge leverage over China's economy. And this was written back in March 14th. And so what's interesting about this, and they're like just like all of our articles, at the very end of the article, there's a link to go check this out. These PDFs will be in the description below, so you can click on this, get to the link over there, so you can go read the full article yourself. I'm just going to summarize because I want to make sure I stay within a period of time and not bore you by reading word for word like I've done with some of the other articles. So I went ahead and highlighted a few things. So I'm gonna scale this up here. As Russia is painfully discovering the world's financial system is controlled by a group of 7 economies. They call it the G7. With the U.S. Federal Reserve starting to tighten monetary policy as the financial contagion from the Ukraine crisis also starts to spread, dollar liquidity in Asia is likely to become tighter. And that's the case, right? I mean, the Fed has printed trillions of dollars in the last couple of years, and there's way too much liquidity, and that's why we have the inflation we do. We can keep reading, and it says, despite the growth of China's banking system, much of it remains domestically focused. China's banks also lack the creditworthiness and international connection that Japan's financial institutions enjoy. This was eye-opening to me, right? What we hear in America, that China is this big, 800-pound gorilla. They've got all this money. We hear they manipulate their money and that kind of stuff, but don't we? Don't we do the same? Of course we do. All right, Now, what does manipulation mean? That's a different story. Okay. Now, with the financing of much of Asia's trade and the flows in and out of various financial centers still heavily depends on Japan. Now, what are financial centers? These are the Federal Reserves of the G7 is what they're really referring to. Japan, dependent on Japan's bankers, and the squeezed between an overheating U.S., meaning we have too much liquidity, and an increasingly troubled China, have a difficult balancing act. So what this is saying is that Japan, if you were to think of a teeter-totter, right? Remember all the old days when we rode a teeter-totter? We had a fulcrum. That's essentially Japan. Japan's the fulcrum. We got the U.S. on one side, we got China on the other side, and it's this balancing act. And really Japan, which we don't hear a lot about, we know after '08 we heard about negative interest rates. It's going to take decades for Japan to recover this or that or all that kind of stuff. They don't have a growing population. We hear all these things in the U.S., but I think a lot of that may be just more of a distraction for us. They may be true, But I think it may be more of a distraction because, as we see, to grow overseas, Japan's banks needed a vast amount of dollars, which is us, right? And you can go through and talk about this, but really, that most national currencies like dollars related assets, such as US Treasuries, they never actually leave the US. Even China's vast holdings of more than $1 trillion of US Treasuries ultimately exist as electronic ledger entries in the US financial systems and can be frozen at the press of a button. This is a world stronghold over an economy, is how the US has structured the financial system. Now, when we watch movies about the Middle East, and we watch movies and we see them with pallets of dollars that are stacked up so high, 4 feet high on these big pallets and all wrapped, and these are going to different. Those are for locals. What we're talking about here is country to country. Okay, there are no actual dollars going to country. It's just an electronic ledger, no different than your credit card. Your credit card, you don't get the $15,000 balance to sit in your bank. It's sitting there. It's a ledger, and every time you use it, it's a transaction. It's electronic ledger. That's what's happening here with the treasuries. Okay. Now we can keep going through here and just talking about the back and forth, and the Japan's working on how to balance using the different foreign currencies and the different foreign banks, federal reserves, and that sort of stuff. And then down here it says Japan does have an insurance policy. As a close ally of the US, the Bank of Japan can borrow dollars directly from the Federal Reserve to provide a temporary overdraft to its banks. This is extremely valuable for Japan and other countries like Japan. Okay, this is an advantage not available to the People's Bank of China or even Hong Kong Monetary Authority, which must rely on a finite amount of U.S. currency reserves, meaning that they have a credit limit, right? And we get to control that. As Russia is discovering, the ability to access these reserves depends on the goodwill of the G7. Well, good luck, right? Good luck with that right now. And so what we're going to see in a couple articles of what's being done with that. So with the Fed not worried about inflation, with the Fed now worried, I was going to say not worried, but with the Fed now worried about inflation, it's no longer transitory, right? Likely to lead a tightening global liquidity. Japanese banks must now make some tough decisions over what to do with the more than $5 trillion worth of overseas claims they have amassed. Now, when they say overseas, they didn't say U.S., meaning 5 trillion spread out among these other countries and these other currencies. Again, they're the fulcrum. They're trying to balance everything out. Their economy is reliant on all these other countries, right? And so they've done a very good job of doing that. So really reading this article and reading some of the other articles, it really seems like Japan could be the fulcrum to the world economy with these two behemoths, U.S. and China. Yeah, people can say Russia, but the reality it's the U.S. and China, right? And the Chinese have made a lot of decisions over the last couple of years, specifically to COVID, that really has affected their economy, and the U.S. is following in suit, right? So let's look at the next article here. It's foreign cash flees China as investors shun autocracies. Let's see here. Increase. Okay, here. So overseas money is starting to pull out of Chinese markets after the risk of investing in autocratic countries was starkly highlighted by sharp drops in Russia's currency and security prices following its invasion of Ukraine. Meaning, all of a sudden people are like, oh, well, maybe communist countries is a bad thing. Maybe we shouldn't trust them as much as we should. I don't know if this paragraph is saying something like that, but the reality is I think a lot of us already didn't trust these types of countries, but our politicians are very much, so to speak, in bed with China. And why? Because billion people, cheap labor, right? We can charge the same amount of money to the consumer, us, and therefore reduce expenses, increase profits, and everybody wins. Now, everybody who has money in a 401k plan or a mutual fund or whatever, we all benefit from this because that means the companies of shares that we own in our investments, what? They profit, they rise, and we benefit from that. So it all is interconnected. But I find it very funny that now that it's like, oh, wow, and this is as of April 10th. So this just was a couple days ago that now we're not comfortable with Chinese markets. So, but money is fleeing out of it and their exchanges. The outstanding balance of Chinese bonds held by foreign investors shrank by 80.3 billion in the month of February, the largest drop since January 15th when the comparable data became available. Right? So not even until 7 years ago, January 15th, did we actually have data on what was going in and out of Chinese markets. So, right, Chinese have been around for centuries, but all of a sudden we have data available to us as of 2015. So that's kind of what we're talking about is like, they're the Great Wall of China is still up, so to speak. There's a lot of privacy. There's a lot of secretiveness that really I think only the U.S. is probably understands some of the benefits of what the Chinese are, some of these politicians that we have. The exodus marks a sharp contrast to the last few years when investment in Chinese securities shot up as markets opened and stocks from the country were included in global benchmark indexes. The ratio of Chinese and Hong Kong stocks in major emerging market funds rose to just under 40% a few years ago from little more than 10% in 2008. So that is a big shift. 10% of emerging market funds had Chinese and Hong Kong countries or companies in those countries. And so you can see since 2008 to now, a lot of the decisions and changes of China kind of opening it up and with the financial crisis, allowing their companies in country to be able to be rewarded from the markets up to 40%. That's huge. But that has since fallen back down to 29% due to a triple whammy of the COVID pandemic, tougher regulations on information technology, and the Ukraine war. Capital that poured into China over the last 3 years may have begun to flow back out, according to a German asset manager. Investors are not simply adjusting positions for the short term, but reviewing their long-term strategy as they begin to pay closer attention to China's political structure and value system. Now, if all of a sudden they're starting to pay attention to, politically, China is a communist country, I can't imagine they were really that dumb, but could be. Who knows? Dollars and greed does a lot of blinding of very smart people. Something many have largely ignored until now. We are debating whether we should keep investing in China when concerns are mounting about a possible Chinese invasion of Taiwan, according to a leading Japanese pension fund. Okay, so this is big deal. A lot of these other countries are really wondering about what this looks like over there. The U.S. and China depends on each other, right? Again, we're talking about the teeter-totter, China and U.S. and the Japan and fulcrum. With the financial connections much deeper than with other countries, the balance of U.S. and Chinese investments in each other, stocks and bonds, reached $3.3 trillion. That's very close to the U.S. GDP at the end of 2020, according to U.S. consultancy Rhodium Group. Unraveling such close ties could have a serious impact on the world economy. Absolutely could it. Now, here's what's interesting now, okay? So here's an article that the China scrambles to cover from West financial weapons. So remember the first article, we were talking about the Federal Reserve, right? We were talking about the Federal Reserve can push a button and shut down the financial liquidity of other countries, which is what they did with Russia. Now China all of a sudden is like, oh, hang on a second. Now we see what this really means. This is a big deal. We have trillions of dollars of U.S. treasuries, and what's this mean to us, right? So here's what they're doing. The Western-led freeze on half of Russia's gold and foreign exchange reserves after its invasion of Ukraine came as a shock to Moscow and an unwelcome surprise to Beijing. The move underscored a brutal truth for China, the world's largest holder of foreign reserves. One day, its international assets could be tempting targets. Absolutely. So if we clicked on this, I'm going to bring this over here in a second for a more focused article here. Okay, so when we go through and read this article, what's interesting to me is that really now the Chinese are starting to do what? Now they're starting to go to different areas. So they are starting to go to other countries that may not be as close to the U.S. as the U.S. thinks. And they're starting to change the dollar for those particular countries. So they're doing it with Putin in Russia, and they're starting to use their currency, the Chinese currency, the yuan, as a global benchmark for their foreign exchange. So it's very, very interesting what's going on over here, and this entire thing. So what countries would that be? Well, of course, a lot of the Middle East countries. We've made a lot of enemies, sadly enough, of more Middle East countries, those who were our allies in the previous administration, now just pulling out of Afghanistan, like we have done with this current administration, has caused a lot of issues. And also, if you think about it, Israel would be one of them too, which has always been a long-term ally. But why would they trust us now? They saw what we did to our own people in Afghanistan. And so it's not a very comfortable situation from a political perspective, but with the political comes the financial, right? And so I just bring this up. I think it's something that we need to be aware of and be concerned of. Hopefully this was helpful to you. It may created a lot of fear. I apologize for that. But I just found it very interesting to get a different perspective of understanding from a currency war perspective. What's that mean? What's that look like? Who are the players? What are the issues? And so now the chess pieces are starting to move a little bit more because it became more real with Russia's invasion of Ukraine. Now China, we probably all agree that we know that they're going to invade Taiwan. And that's just kind of par for the course. And so I think the chess pieces are all moving around. What are we going to do? Right? What are we going to do as the U.S. and our allies in the G7? And so it's an interesting situation to be in. It seems like history continues to repeat itself. And unfortunately, that's what happens when man gets involved. Pride and greed, pride and greed, pride and greed. We let those get in our way, then that leads to power-hungry individuals and group of people to lead countries and make decisions that we've seen. And we've seen what that has done to our current country and the current administration as well. So anyways, go ahead. If you haven't subscribed, hit the subscribe button. If you have any comments, add some comments. And thank you so much for spending some time with us. All right. We'll talk to you soon. Thanks. Bye-bye.